Today, I'm diving into something a bit controversial. I'm going to talk about why I shifted my focus from investing heavily in real estate all over the country to now concentrating mainly on the West Coast, crypto, and stocks. And I know this might ruffle some feathers, I get it, especially among my fellow real estate investors, but hear me out, and you might start to understand why. Let's get into it. So let's start with real estate. I was investing in properties across various states, Midwest, East Coast, South, West Coast. I'm intentionally leaving out locations so no one gets mad at me in the comment section. But if you want to take a guess where I was investing, go ahead and drop those guesses down in the comments below. So, while real estate is always a fantastic way to build wealth, and I will always advise people as a first investment, definitely real estate, I encountered some recurring challenges that made me rethink my strategy and ended up bucking that trend for my personal portfolio. And remember, I'm just a guy on YouTube, so this is not investing advice. I'm just sharing with you what I experienced and how that might be interesting for you to hear. So the biggest thing, I know, this is the biggest thing, but weather and maintenance costs. So our properties were in areas with extreme weather conditions. Think heavy snow, high winds, frequent flooding. Homes in these areas take a beating. And when I heard some of these places have like golf ball sized hail, I couldn't believe it until my property manager sent me pictures and I saw what the damage did to our roofs. So with all of that weather, we were looking at constant roof replacements, dealing with sump pumps, and a ton of other maintenance issues that just kept adding up. And this was even before you talk about renter wear and tear. I don't want to get into that in this video, but always keep that in mind. Renters don't always treat other people's property as if it were their own. They're not all bad, but they're not all good either. All right. I'll get into some real estate videos next time, but this is just why I transitioned. Okay. So on the flip side of those areas with more harsh weather, California and Nevada offer more temperate weather. Yes, there are still maintenance costs for sure, but they're significantly lower compared to the properties in these extreme climates. Less roof replacements, almost zero worry about flooding, no hurricanes, no tornadoes to watch out for. It's just an easier ride for me personally overall. And being born and raised in California, no, we do not have earthquakes shaking our homes every day. There are quite a few, but most of them you don't feel. In my 40 years of living there, I felt maybe 2 or 3 really big ones and then maybe like 10, 15 total. Right? So that's not a lot. And 40 years, 10 to 15, you do the math. Okay. With all that being said, less snow, less extreme weather, and with the West Coast not being known for basements, there's much less flooding. You know how many sump pumps I had to replace because of flooding in the basement? Okay. So now I know some of you might argue that there are plenty of successful real estate investors who operate outside of California and Nevada, and you're 100% absolutely right. I will never deny that. But this is just my experience, right? Everyone has a different experience, and it's why I decided to focus on my investments that require less hands-on management while still delivering solid returns. Maybe not as high the upside, but still solid returns. Could I have found better properties? Sure. Better maintenance, maybe. But I was buying the same aged homes across the different states as my California and Nevada homes. And they've just cost much less to maintain over that same amount of time. So same age houses, less maintenance cost. All right, moving on. Moving on to what I'm doing now and how I reallocated some of those funds from selling those properties into my current portfolio. Enter crypto growth and dividend stocks. These investments have allowed me to maintain a more passive approach while still achieving some pretty good returns. Impressive, some might say. For example, my stock portfolio year to date, this 2024, has seen an 11% growth, which is modest if you just put all your money into like the NASDAQ 100, which I didn't do. But I'm also getting a 9% dividend yield. And it's a mix of growth and income stocks, which provides a balance that fits my investment goals. Remember, it's not for everyone, but it works for me. And additionally, I'm slowly increasing my position in crypto with a focus on Bitcoin and Ethereum. Both of these saw huge declines in 2023. Trust me, I know I saw some huge declines, but they've recovered pretty well in 2024. They've both seen over 100% growth. And this strong recovery has signaled a resilient market and an opportunity I didn't really want to pass up. Crypto for sure is not for everyone. And as Mark Cuban says, if you invest in crypto, be ready to set that money on fire because there are absolutely no guarantees. And I know this sounds like a lot, but the beauty of this strategy is that it frees up my time. I'm not constantly worrying about property maintenance or tenancy issues. Instead, I can focus on growing my portfolio and exploring new investment opportunities. One of the old adages is that I stopped replacing toilets and truly have hands-off income streams. And if you ask any wealthy person, the goal is to create as many passive income streams as you can to add to your active income. Now, I want to be clear and remind you, this approach isn't for everyone. Some investors thrive on the challenge and rewards of managing a diverse real estate portfolio. But for me, the shift to West Coast properties, crypto, and a balanced stock portfolio has been a game changer. I'm less stressed and I don't have to worry about weather and maintenance costs. Well, a little with what I have left in my West Coast portfolio, but it's all about finding what works for you and what works for your lifestyle. Since doing this change, I've been able to be more present with my family and just spend more time at ease and doing other things. One thing I also want to mention, I'm definitely still growing my real estate portfolio back, but I'm doing it a different way. I'm doing it through REITs or real estate investment trusts and BDCs or business development companies. The reason I like this is because they are traded on the stock market, and those stocks and BDCs are required to pay out 90% of their net earnings to shareholders as dividends. Most of the benefits of real estate, none of the work. And of course, this helps me stay diversified as BDCs and REITs don't follow the trends of the NASDAQ 100 or the S&P 500. So if there are shifts in the market with the NASDAQ and S&P, they don't always correlate to REITs and BDCs. So what do you think? Have you had similar experiences with real estate? Or do you think I'm missing out on something by not investing more broadly? Let me know in the comments down below. Thanks for watching. As always, like and subscribe if you haven't already, and definitely stay tuned for more insights on investing, business, and building your financial future. I will see you next time.